gentlemen, I'm Hiral. We have with us Riya Singh, technical analyst, currencies joining in. Riya, my first question coming to you is we have been talking of what's happening with the rupee. There were some positive moves, but again, the rupee has come slightly under pressure and it's edging lower versus the US dollar. We paired gains from the previous session, settled almost at around 75.64. What's the sense that you're picking up from here on with regards to the pair, at least for today's session? And overall, what's the strategy that you would recommend?
See, the rupee did weaken again in the last trading sessions, mainly due to the risk sentiment arising from the US China trade deal and the global perspective. Uh, but if you look at the the technical aspect of the rupee momentum in the yesterday session, it did had a gap down, but for most of the session it remained sideways within the range of 76.15, 75.60, which we are observing from past few sessions. The rupee has remained consolidated to this path. Uh, and even if you look at the major moving averages to compare the momentum of the rupee, it has quite remained sideways, and the short term, medium term, and the long term moving averages has come parallel to each other, indicating that there is a lack of volatility that is happening in the pair, and it is hinting at an early consolidation phase for a shorter term. So, taking into the consideration, even the relative strength index, which is the which indicates the strength of the ongoing trend, is quite below the reference line. So, all in all the indicators are indicating that the rupee is likely to remain in a consolidation phase in the trading range of 76.15, 75.60. Accordingly, even in today's sessions, if there is a breach of either of these trading range, the rupee will pick a momentum trend, but otherwise, it is likely to stay within the range.
Okay. So overall as well, the way RBI's intervention is happening in the overseas currencies derivative market, how is that going to impact the rupee?
See, the RBI is actually gradually entering into the NDF market, and the intervention that the RBI is aiming for is to curb the swings, especially the ones which are highly volatile. Because in the past sessions, or the trading momentum, we have seen quite a swing in the rupee towards leading the rupee towards 77 and beyond. So normally to curb such a high volatile trend, RBI is RBI enters into the NDF market, because just the intervention in the local market or the spot market are not giving the desired result. So accordingly, the RBI intervenes into the NDF market. Also, if you look at the the commercial banks presence in the IFC, which is in Ahmedabad, even they are allowed to participate in the NDF market beginning June. So this will pave market to this will actually pave the RBI to intervene into the currency market to curb the volatility more into directly, into directly the benchmark market rather than the local market. So I think the direct intervention from the RBI that is happening into the NDF market will definitely help the rupee for giving a huge volatile swing, and will curb the depreciation at the 77, 77.20.
Okay. And apart from that, if you see, yesterday as well, we spoke about May, which has been seasonally weak. It's depreciated 9 out of 10 times in May. But are you expecting this trend to continue amid coronavirus, amid the US-China trade war?
Yes, because see, rupee right now is tracking the dollar strength and the global risk sentiment, and is likely to underperform uh, because though there has been a relaxation in some part of the domestic zones, but it will take time for the economy to pick up. The supply chain still is under pressure. The industries are still, the major industries are still closed. So as long as there is no pickup into the economic activity, rupee will remain under pressure.
Okay. And what's the sense, Ria, that you're picking up, especially with regards to the yen? That is something which is gaining momentum right now.
Uh, yes, see, if you look at the yen performance, especially let's talk about the the domestic pair, yen rupee. So, though probably it had opened with a gap down, it did gained quite a bullish momentum into the trading session, leading to close it above the the medium term moving average, and the relative strength index is also supporting this momentum. So I think in the coming session, if there is a green shoot or the pair opens into the green territory, it will go further upside and may test 7150, into the coming session.
Okay. And any other strategies that you would want to recommend?
Yes, one can, like I said, in that rupee is likely to remain into the consolidation phase. So how one can go for a trade into rupee will be to buy rupee above 75, 7605 in the coming session. If there is a breach above 7605, rupee can be a buy for the trading section. The other trade that one can look for is buy into the pound INR. So I'm finding pound INR to be, quite on the bullish side, because if you look at the trading session, though it has given a red candle or a bearish closure, there has been quite support from the lower side. So I think if the pound opens above 94. 75 or breaches the same into the coming session, it will test 95, 95.25. So one can go for a buy above the same.
Right. All right, Ria. Pleasure speaking to you, and thank you for sharing the strategies and the outlook in terms of different currencies as well. Thank you very much.